Well, first up, Ghana is expected to receive fresh funding from the World Bank, the African Development Bank, and other development partners in the coming weeks, following the successful completion of the fifth review of the IMF program. The review has triggered the disbursement of about $380 million to support the country's economic recovery. Here's more in this report.
When Ghana signed up to the IMF program in May 2023, it was supposed to come with some financial support. That is, some $3 billion spread over 3 years. However, there was another clause in the agreement that will see other partners support Ghana after successfully completing each review. The World Bank has already advanced more than $2 billion to Ghana based on the significant progress the country has made under the IMF program. Majority of this funding has been advanced towards the energy sector, financial, poverty reduction, as well as governance. Other donors like Germany is also expected to come on board to support the country. Some are of the view that the IMF program is not just about the money being disbursed, but rather the associated reforms and restoration of investor and donor confidence in the Ghanaian economy.
Joining me on Zoom, Associate Professor of Finance at Andrews University in the U.S., Williams Pepper. Hello to you. What does the successful completion of the fifth IMF program review signal about Ghana's economic performance so far?
To you, Daryl, and I hope you are doing very well.
I'm great.
This is coming at a very important time, and it gives us a signal that yes, Ghana is on course in ensuring that we keep to track of the IMF program, specifically meeting the quantitative performance indicators, and also some indicators or targets that have been set. It shows that our macroeconomic stabilization is strengthening. I think we've all witnessed a very strong growth where we've seen that we are now experiencing a single inflation digit since 2001. This is very good. Our fiscal, which is our taxation, and then how we've also spending the country has improved. We reduced expenditure and then improved on revenue collection. External factors has also been very helpful to us, not too much impacting on our economy. And we have also benefited from our exports with cocoa and gold. An important progress is how, though we have not finished the entire external debt restructuring, but significantly a lot of bilateral institutions and countries are coming on board and also giving us this debt relief that we need. So in short, this review points to the fact that it's a positive signal and it shows that Ghana is on course.
So we've been talking about the expected inflow of funds from the World Bank, the African Development Bank, and other partners. How significant is this in supporting Ghana's economic recovery?
Because we declared ourselves that we could not pay most of our debts in 2001 thereabout, we have been locked out of the bond market where we could get funds coming in. So the money that will be coming from World Bank and AFDB and other partners. One, they are coming in to give us a direct support to areas that Ghana will not be able to get funds from the Eurobond. And also, this support is coming in to help the economy in one, supporting our reserves and ensuring confidence. The moment sometimes you receive cheap, let me use the word cheap or low cost of funds coming from these partners, really supports Ghana's projects. And so it's good. The important thing is that we are not going to have any liquidity challenges. Our foreign reserve is going to improve. And at the end of the day, the entire economy is going to see the strength.
And the IMF has revised Ghana's end-year growth projection to 4.8%. What factors do you think are driving this revised outlook?
So I'm sure in September, we've all seen an improved activities in our economy. If you ask me, agricultural sector has improved significantly. Service industry has also improved. And then on the external side, we have also seen a great improvement in activity of gold with the gold bond strategy that Ghana has been on. And then also our cocoa export has improved. So seeing all these activities improving, it gives rise to the fact that yes, we may have to look at the outlook of the GDP and improving it. Another important factor is that the purchasing power of the Ghanaian has increased or improved with a decrease in inflation rate. So there's a lot of activities in terms of buying and selling, and when these are happening, you will be able to witness that yes, there's a need to revise the growth outlook. I was in Ghana in the first 2 weeks of December, and I saw a lot of activities happening in terms of trade. So I'm not surprised that the growth outlook has been increased to 4.8.
Yeah, I was going to ask you next. So we're expecting new funding. We are talking about improved growth outlook. How does that translate into benefits for households and businesses?
So for the household, the first thing is inflation pressures are lowered. We've seen Bank of Ghana lowering their monetary policy rate. This is going to lead to a lowering cost of funding for companies. Companies will be able to expand. And then, a lot of activities are going to be able to.
Please unlocked.
Another important aspect that we are all witnessing is how stable our forex has become. We've seen stability in the forex, which has had an impact on import relief. And then also confidence in the Ghanaian market, which is driving other foreign partners or investors to look at Ghana and say, yes, Ghana is now ready for business. And that is driving these things. So these are going to be the benefits that Ghanaians are going to get when we see all these things happening. We expect that 2026, should be a positive year if government stays on course with the IMF program.
Fingers crossed. So talk to us about the risks that could threaten economic recovery despite the IMF disbursement of $380 million, also based on the revised growth projections.
So in terms of risks, I'm thinking in my mind, we have to look at implementation. How are we going to use the money? What areas are we going to use the money for? That is very, very important. And then secondly, coordination. How are we going to coordinate all the macro activities happening around the inflows coming in? It is very, very important. I know that the trend that released by IMF must go towards development. Which angle is the government going to use that one for? We know they have their big push agenda. Are they really going to look at that? In terms of risks, I'm praying that the government will not deviate from its timing and terms in terms of the debt restructuring. And they must stay on course with any agreement that they have had with any of the partners involved in the debt restructuring. Any deviation will be a negative signal to our program. Then the state-owned enterprises must be looked at. State-owned enterprises, we already know the ECG. We've heard that they say they are doing well, but we have not seen the final figures, so we have to wait. So government must have its eye on the state-owned enterprises. They should not borrow more to incur more liabilities that will be put on government accounts. And rather, they must be able to work and turn out. We want to see them paying dividend in 2026 based on their performance. So this is very, very important. Then lastly, our energy sector is very key. Energy sector debt is still there. I know the government has a plan on making sure that the energy sector debt is taken care of. I'm praying that there's no deviation. So these key elements are very, very, very important. Any deviation from it will be a risk factor that will not help Ghana to achieve its set target.
Great stuff. Happy New Year to you, just in case you're not able to talk before we enter 2026. Great to speak with you, Professor Williams Bufra, Associate Professor of Finance at the Andrews University. You're watching the Marketplace, turning to the financial markets.
View.
And the government recorded a 19% oversubscription of treasury bills for the fifth week running. That's according to auction results by the Bank of Ghana. Meanwhile, interest rates went up across the yield curve. There's more in this Business Desk report. The target for the auction was estimated at 3.3 billion Ghana cedis, but the government got 3.95 billion, about 19.69% oversubscription. It, however, accepted 3.89 billion cedis worth of total bids. A little over 61% of the bids came from the 91-day bill. 2.449 billion Ghana cedis was tendered. The uptake was 2.447 billion Ghana cedis. For the 182-day bill, 781.43 million Ghana cedis was tendered. The bids accepted were estimated at 726.43 million Ghana cedis. Also, 726.43 million Ghana cedis was tendered for the 364-day bill. The same amount of the bids were accepted. Meanwhile, interest rates increased across the yield curve. The yield on the 91-day bill went up by a basis point to 11.09%. That of the 182-day bill also jumped to 12.52% from 12.43% the previous week. The yield on the 364-day bill rose by 3 basis points to 12.94%. All right, let's turn to Caitlin Ndasi of Data Bank Research for your stock market update.
The stock market remained still last week, despite recording price gains in 6 equities against 2 laggards. The top gainers were Cal Bank, GCB Bank, Republic Bank Ghana, Goil, Enterprise Group Limited, and First Atlantic Bank. Conversely, Total Energies and New Gold both declined. Despite the gains, the Ghana Stock Exchange Composite Index remained still weakly at a year-to-date gain of 79.1%, while the Data Bank Stock Index slightly declined by 0.08% to a year-to-date gain of 110.05%. Weekly turnover advanced by 1.93% weekly to 157.5 million cedis after trading 37.2 million shares over 22 counters. MTN the market turnover. On outlook for this week, we expect the prices of Goil and ATI to increase, while Total, SIC, Cal Bank, and Fan Milk to decline. For Data Bank Research, Caitlin Ndasi.
All right, you're watching the Marketplace. We're taking a short break. When we come back, we'll be talking the new VAT reforms and the headers ahead. Don't go anywhere. And welcome back to the Marketplace. President John Mahama has given assent to the recently passed Value-Added Tax Bill 2025, which was presented by the Minister of Finance. The assent means the bill has now become law, paving way for its implementation by the Ghana Revenue Authority beginning next year. Yes, more. The development marks a major overhaul of Ghana's tax system aimed at simplifying tax laws, consolidating existing legislation, abolishing the COVID-19 levy, and improving compliance through digitization of revenue administration. The reform seeks to promote greater fairness and support economic growth as the country intensifies efforts to enhance domestic revenue mobilization. The changes form part of recommendations from the International Monetary Fund to reduce bureaucratic bottlenecks in tax collection. Key reforms include the unification of the flat rate system, a reduction in effective tax rates, an allowance of GET fund and NHIL deductions as input tax, and measures to improve revenue efficiency. The reforms will also see the rollout of digital platforms such as the VAT system to ensure accurate and transparent tax collection. The bill, which was passed by Parliament in November following its presentation during the 2026 budget statement and economic policy, has now received presidential assent, giving Ghana Revenue Authority the mandate to proceed with implementation. All right, join us on Zoom, tax expert Francis Timor-Boy. Good afternoon to you. Thanks for joining us. What are the biggest implementation challenges the Ghana Revenue Authority will face now as the new VAT Act takes effect next year?
So, Daryl, with every tax reform like we have in now, there are transitional challenges which they are unavoidable. You remember in the system changes like this, companies and even government itself will have to make changes to their system because now everything is, we are using systems to do that. The EVAT needs to be reconfigured to reflect the new taxes. Customs port systems, when you are bringing goods from the, when you are clearing goods, the taxes that are calculated, all of these things are going to change. Companies, of course, the bigger ones, with big, ERPs, they need to reconfigure all of these things. It is easier to stop charging a tax than implementing a new one. So these inevitable challenges with regards to system readiness, we foresee it happening. So when that happens, of course, consumers may not get the initial benefits in the early weeks or days. But with time and with engagement and guidelines issued by the Ghana Revenue Authority, we expect that these challenges should be, wiped off whilst, the system is being rolled out. But initially, we're going to have some delays and challenges, particularly with regards to the system that we are using to, collect the taxes.
You think businesses are not prepared to comply with the new requirements and digital systems like the EVAT?
Yes, there are some businesses that you can easily, switch over. If you are selling goods, of course, you can easily, depending on the nature of the business, but largely, a number of them. We are in a season where most people are on break. You have IT experts having the holidays, so no serious business activities taking place within this time. And we just heard that Parliament has, assented. The President has just assented to the law. So obviously there will be some delays. We can't say every business, but majority of them would come from holidays, maybe first week in January, to start, full business activities. Some can go live immediately, but we even expect government itself to not fully be compliant in the early days of January because the systems need to be changed.
Yeah, what do you have to say about taxpayer education and public awareness? Could the gaps undermine the effectiveness of the reforms?
Fortunately, this reform is not too drastic. Yes, we know it's a reform, but the content largely remains the same. The COVID-19 is going away. We are recoupling the other taxes. So taxpayer education is critical, but then it is not as the implementation. The system implementation. If you talk to businesses, their main challenge is how they adjust their systems to accommodate it, but not necessarily the taxpayer education. We're not ruling out taxpayer education, but then on a scale of 1 to 10, I would say education is a bit minimal compared to the system that needs to be adjusted. And we are aware GRA has finished drafting their guidelines, which will be rolled out very soon. I think they were all waiting for the law to be assented to. Now that it's been passed, they will start issuing some public notices to taxpayers. But the biggest of all is the system challenges or the system changes that needs to be adjusted to reflect the new taxes.
Yeah, good that you highlight that. What operational or technological risks could affect accurate VAT collection under this new system?
It's a calibration. So first of all, the COVID-19 is going away, and before it was tax on tax. That took the effective tax rate to around 21.9%. Now we are removing the tax on tax. So all of them are going to stand on themselves. So we are having the effective tax rate to be 20%. That requires some changes in the system. So if you do and you do not test to ensure that you are getting the correct collection of taxes, that will be a revenue loss to government. So most systems will have to go through that testing to ensure that whatever that changes that has been done is calculating the taxes correctly. And we believe that is the major thing that needs to be done. We experienced this before in August 2018 when we did the decoupling. It took customs about 3 months before they were able to readjust the ICOMs, the one that they used to collect the taxes when you are bringing goods to Ghana. It took them some time. So again, we expect the same thing to happen. And remember, government is very keen with digitalization this time. Even the VAT system, we are told that they are not fully ready to go live. But with time, like I said, maybe a month should be enough for businesses to start adjusting, and then for customers who go to such tax points will get the benefit of the reduced taxes in the goods and services that they pay.
And what measures should the GRA and government put in place to ensure a smooth rollout and avoid disruptions to businesses?
I think initially they have to be a bit flexible, and we expect that they issue some public notice. Of course, government has passed this law, and the GRA's own is to implement it. So businesses that may have some peculiar challenges, I think GRA should be accommodating. In fact, they've done it before. In the past, anytime they roll it out, they are able to accommodate it. It's not intentional that they deny consumers the price reduction. Some of these things are real, and there are challenges that come with technology. It is not a plug and play. So we plead with consumers that when that happens, we go to some pay points, you don't get the taxes reflected. You just have to exercise a little bit patience for the systems to be adjusted. So GRA, we expect that they issue their guidelines. And then, of course, they may not have the power, or unless Parliament gives them the power to suspend the implementation. We wait to see the notice that they may put in the public domain for taxpayers and consumers as well.
All right. A happy New Year to you, Francis Moboy. I appreciate your thoughts, insights on this program as always. I enjoy the holidays. And that's it.
Same to you.
Right. That's it for the marketplace, everyone. Thanks for watching. More news on our website, myjoyonline.com/business. That's it. A triple version of me, by the way. T-bills, government requires 19% oversubscription by interest rates rise. Also, NIST-EPR says DOG's gold purchase losses stem from structural challenges, not politics. myjoyonline.com/business. My name is Darryl Powell. Thanks for watching. We are back same time tomorrow.